Hey, everybody, we're back with another episode of Pure Perspectives. I'm Clark Alexander. I'm sitting down with Willis Richardson. Willis, how you doing?
I'm doing great, having a wonderful day.
Good. Well, Willis, I want to get to the point. I want to get to the
Okay.
point on points.
Ooh, I see what you
See
did
what I
there.
did there? See what
Yeah,
I
I
did
did.
there? So I would say probably the most common question we get when we provide a quote would be somebody gives us their desired purchase price, down payment, credit, income. We're able to give them an estimate on what rates are available. The biggest question we get are, what are points? When does it make sense for me to buy points? Why would I buy points? And so we're going to dig into that and help people
Yeah.
understand. Really, there's some pretty simple math to determine whether or not it makes sense. And we'll talk about that specifically. So why don't we just start with the fundamentals of what are points when you look at interest rates?
So now points has two sides to it, right? So there's points that buy the rate down lower over time. So over time, you pay money up front because in the long run, it's going to make you better off. And you're buying down the rate, you're paying the lender up front for a lower interest rate because in the long run,
Basically
you're better
prepaid
off.
interest.
Kind of, but even more so than that, because you're going to save way more than what that little bit is. And then a lender credit is going on the other side. And what that is that means in the long run, the lender is better off. So they're going to give you money up front to cover closing costs, things like that. Because in the long run, if you keep this loan long enough, it's going to be better for them because they'll make more in interest for you. And where that break even point is, that's called your par rate. And your par rate is determined based on your credit score, how much money you're putting down, your loan amount, and in some cases, the area of the country that you live in. So those four things make up the par rate for you specifically. And then anything below that par rate is better for you, so you pay money up front. Anything above that par rate is better for the lender, so they give you lender credit up front as well. So it's a one-time fee, and where most people tend to use it is buying the rate down. Sometimes, and not all lenders offer lender credit. All of the lenders we work with offer lender credit. So,
Yep.
but not all lenders do, but all lenders will offer points to buy down the rate. And like you said, the math to determine on whether it's a good idea or not is pretty simple. You look at the difference in the cost of your closing. So, how much did your closing costs go up by buying down the rate? And how much does it save you on your monthly mortgage payment? Okay. And you take, let's say it's $2,000 more to buy down the rate to a specific rate, and it saves you $50 a month, right? So you take 2,000, divide it by 50, you get 40 months. Is that right?
Sounds
I
right.
think so. Something like that. Is that somebody's going to
Bingo.
fact check this? Boom, I'm right. So it takes 40 months to break even. Well, then you have to ask yourself, am I going to be in this house in 40 months? Now, if you're somebody that moves every 3 years, probably don't want to spend extra money at closing to get savings that take 40 months to be realized. You want to get your savings, to even break even.
Yep.
You want to get your savings at closing. Now, if you're somebody that's like, I'm moving into this house, this is my forever house, you want to spend a good bit on points. But here's the second question. Now, maybe your long-term plan is to be in this house and they're going to bury you out of this house, but maybe you're in a high rate environment right now. And you think that in the next 3 years, rates might be lower and that break-even point is at 40 months. Well, if you refi that mortgage anytime between the day you close and 40 months, you left money on the table. So in most cases right now, we might have a little bit of a buy down that we suggest to our clients, but we're not asking them to buy down 1.5 or 2 points typically because the math just doesn't math. Most likely rates are going to be lower in the next 2 to 3 years. Now, we've been saying that for 2 to 3 years. So,
Feels longer than that.
Yeah, it feels longer than that. We don't have a crystal ball on this, but it
Yep.
does seem that rates will be lower at the end of the year. If that's the case, you probably don't want to spend a lot buying down the rate right now.
Yeah, and the example that you used, 40 months is a long time,
Mm-hmm.
right? Like I would say in most cases that might be a little long. When you're looking at like 24,
Mm-hmm.
all right, like it might be worth it. But I think it's very important to talk to your loan officer and say, First of all, get a good read on what the points are at Ferry and interest rate points. If they just give you one rate, ask them for a broader view of what the rates are with the associated points, so you can see where you are and what cost you might be willing to take on. So you want to just understand, to Willis's point, how long you're going to be in the house. What is a realistic amount of time to break even on the cash you're going to spend up front to buy the rate down? I typically say, like, let's look at 24 months and we'll go from there. If you want to go up in months, great, we can go up in months. But, I agree with Willis, in a high rate environment, which I would consider us still in, beyond 2 years, let's be honest, let's hope we're not in the same environment in 2 years. So you don't want to leave money on the table. Buy the rate down to a reasonable amount. Don't empty your bank account to do so. Take advantage of the better rate and break even in a shorter amount of time.
Right. And one thing that I forgot to mention when we were talking about points is another way of saying percent, right? So 1 point is 1% of the loan amount. So if you have a $400,000 loan, 1 point is $4,000. Okay. If you're going to buy down your rate, it's not like you can just say, I want to spend 1 point, because lenders round to the nearest eighth. So they have 6.0, 6.125, 6.25, 6.375, 6.5, all the way up, right? So, they might have, maybe your par rate is somewhere around 6.75. Well, 6.5 might be half a point. 6.375 might be a point and a half. And they move those numbers around to entice people to either buy down a little bit farther. So sometimes a little bit lower rate for just a little bit more is better. So you want your loan officer to be able to look at that rate stack and see, how much of a percentage of this loan do I want to put up to be able to get that lower rate? And is it worth it? So
is it worth it? And to the point of, like, I think you've phrased it right. Like, ask your loan officer, can I see the rate stack up to 2 points, right? Par to 2 points. So you can get an understanding, because every rate line is not going to be the same gap in points. So you want to get an idea of, like, hey, well, actually, for an extra $500, I can actually bump down to, 5.75, whatever it is. So you want to be able to understand that. But yeah, good point on the point.
Oh, yeah.
A point is a percentage of the loan amount.
Right. And the other thing that people, it goes the other way. Let's say you're going to be out of this house in 2 to 3 years because your company has you moving every 3 years. Well, if there's a lender credit where you can get savings to cover your closing costs up front, and that monthly payment is higher than your par rate and the break even is 40 months out, but you're going to be selling in 24 months, get your savings up front.
Take the money.
Here's the thing. Your interest rate is only a bragging point for you to your friends. If you can afford the payment.
Very good point.
I mean, that's all an interest rate is. I saw the best thing the other day. The difference between
sounds massive, though. Yeah. Yeah.
than the $79 that you're going to have for just a slightly higher interest rate. Interest rate, really, it's a bragging right. Like, hey, I got a really low interest rate. You know what? Look at me. So yes, the other thing about points, yes, we can get you the bragging rights. We don't make anything off of the points, by the way.
No.
That's not how a loan officer is paid. So
No.
whatever interest rate you want, we can get you there. But we might advise not spending that much to get there, because, like we're saying, the break even might be so far out there that it just doesn't make sense.
Yeah. Very good points. I think, at the end of the day, make sure your loan officer is giving you a broad enough view of the rates and the points associated with those rates. If you're uncomfortable with the math, have your loan officers break it down. Like, how many months is it going to take me to break even? If I buy down, if I buy a point and a half, like, how long is it going to take me to break even? So you can say, all right, we need to be in this house for 18 more months if we're going to break even on this buy down. Or if you're cash strapped and you're not going to be in the house very long, take that lender credit. It's there. Take it, put it towards closing costs, lower your out-of-pocket cash at the closing table through a lender credit. And your loan officer will be able to tell you the whole gamut of what, based on the information Willis said we need in order to provide a rate. We'll give you the whole breakdown of what that looks like.
Mm-hmm. Yeah.
Well, hopefully this helps. Willis, thank you. We got to the point on points.
We did.
We did some basic math and we passed.
Yeah, we passed.
So I feel like we're really making ground on this thing.
Yes. We're taking strides.
We're taking strides. As always, thanks everybody for tuning in. Please leave us a like, leave us a subscribe, leave us a comment, especially if you have a math problem you want Willis to solve.
Yeah,
Please
exactly.
leave that in the comments.
Hey, no calculators. No calculators were used in the filming of this.
Eyes on your
episode.
own test.
Yeah.
Thanks everybody for tuning in. We'll be back soon with another episode of Pure Perspectives. Have a great day, everybody. Take care. See you, Willis.
Bye, guys.